A good time to bring in then our technical experts on board. Manav Chopra of Indiabulls Ventures is joining us, and also we've got Sarvendra Srivastav, independent market expert, right here with us. Good afternoon to both of you gentlemen, and appreciate you joining us once again on this show of Bloomberg Quint. But let me come to you first, Manav. We've seen some bit of, profit booking coming at the top since the last 2-3 days. How should one approach the market? Should they stay away? Is it time to book long positions or just stay invested right now?
I think it's definitely a good time to take some profits off the table. The markets have actually seen a good series of at least 1,000 points rally in Nifty with any sharp or any good correction. So, markets would consolidate going forward. If we compare Nifty and Banknifty, there is a negative divergence pattern where Nifty has formed a series of higher high which has not confirmed by Banknifty. So I sense there could be some sort of a consolidation going forward. One can maintain a neutral stance, and 11,500 is an important support for the Nifty on the lower side, and the resistance is at 11,650. So this could be a very short-term range, and only a profit booking or some some decline would come only if we break 11,500. So at the moment we don't want to initiate any trade recommendation on Nifty and Bank Nifty. Specifically for Bank Nifty, the support will be at 27,750 and the resistance at 28,300. So this is a overall 400 points range for the Bank Nifty. We expect the banking index to trade in.
Okay. So that's the view on the index. Sarvendra, how are you approaching trade this afternoon?
Yeah, very good afternoon, Neeraj. See, on the Nifty, my sense is that probably this move will be more stuck in ranges and then probably moving higher if at all it keeps on holding that 11,200, 11,300 support area. So you would be stuck in ranges and then gradually wanting to move up. So that would be the case, but in between you will be testing those ranges on the downside as well. So I would say that right now the range has shifted between 11,450 to say around 11,550, 11,570 onwards. So 100, 120 odd point range is what I would suggest, and my sense here is now that we are going to probably test the lower end of this range now over the next 1 or 2 sessions. So I would say that purely from a trading side, I would want to short sell Nifty, target of around 11,450 on the spot. Stop loss would be kept just above the high that we printed. 11,623.60 is where I would keep a hourly closing only stop loss, and for the next 1 or 2 days I would want to short sell the Nifty for a small trading bet.
Well, the range for the expiry week, which is next week, has become quite narrow if you look at the options data. Okay, but let's just get you some trading strategies from our experts. Manav, let me come to you. Stock specific this afternoon, what are you recommending?
Yes, my first buy call is on Petronet LNG. The stock has actually seen a good decline of over 25% from its peak of 275, and on the weekly charts there has been a good base formation. The prices have also formed a minor higher bottom, which indicates a possible trend reversal on cards. The momentum indicators after a good 6-8 months have entered into a bullish territory, and the volumes also on the lower side has confirmed a change in trend. So at the current levels, I think there is a good risk reward ratio. 225 is an important support. We recommend a buy into this with a stop of 220 for an upside target of 255. My next call would be a buy on Asianpaints. The stock actually has seen a good series of decline since past 4 weeks from its peak of 1490, and it has declined by over 7-8%. The stock overall has been in a very good uptrend, and recently there has been it is indicating that this correction would come to an end as it's nearing its important support zone and the oversold area in an uptrend. So in such a scenario, I think it's a good risk reward to enter Asianpaints, even though the stock has been an underperformer recently, but the overall trend has been bullish. We recommend a buy into this with a stop of 1360 for an upside target of 1470.
Okay. And Sarvendra, what are your ideas for the afternoon?
See, I'll go with 2 buys and a solitary sell. The buys that I have today, the first one is being BEL. As a disclaimer, the stock is in regular coverage, and we have positions in this from time to time. This is purely a trading call. We also have a positional call which is pending, which has got a much higher target, but pure trading call for the next 1 week, say a target of around 125 is what I would recommend on BEL. The stock is nicely consolidating over the last 15-20 sessions, just above that, just above its key short-term averages as well as medium-term supports. So I would say buy, target 125, stop loss at 111.40 on an hourly closing basis on BEL. The next one that I have is from the pharma space, where we have been maintaining over the last many months now that this is one sector which is probably bottomed out. And within that, a buy on Lupin, target there, a slightly longer positional target there, a buy on Lupin for a target of 980 with a stop loss kept at 879.40 on an hourly closing basis. And the last one is a sell on Yes Bank. I think clearly this one is faltering. Within the Banknifty, I think a couple of names faltering. This is one prime candidate there. My sense is that more weakness could creep in once it breaks important supports downwards, which is 350. But for the time being, I would say that it is going to attempt that 350, 351 support area range. So a sell with that target in mind, 351 is the target, and a stop loss kept at 391.60 on an hourly closing basis. All my levels, all 4 levels are all spot levels.
Okay. Stay on, gentlemen. So much more to talk about. Let's welcome in our next guest, Deepak Shenoy, founder and CEO at Capital Mind, joins us right now on the show. 3 hours ago, Deepak Shenoy has put out a piece of research from the Capital Mind stable about the Q1 earnings report, earnings results in a long-term portfolio, part 1. Deepak, good having you. Thanks for joining in. We did a couple of pieces over last Friday and this Monday about companies that have either disappointed big time or surprised positively big time on the quarterly front. And we've seen that this time around, result rewards were lasting for a few days. Now that you have come out with this note, what's the synopsis? What has stood out for you, which impressed you enough to maybe take a call on the stock?
No, actually, we've seen some results kind of add on. So some of the fresher positions we have seen happen to be in some banks, because some of them have actually done much better than we expected, and they continue to do interesting things in financial companies. We're largely aware that a lot of consumer companies have done well. Good portion of that is also because of the channel focus on GST last year, which would have reduced their intake. That means sales would have been less last year compared to this year. So you're seeing some of the FMCG companies, including companies like Dabur, up tremendously from an earnings perspective, sometimes from a volumes perspective, which I don't expect will last in the September quarter, because September 2017 saw a big jump compared to June 2017. So this year the base effect will work negatively in that favor. There are roughly, there seems to be a reasonable amount of growth that's happening in some of those mid and smaller caps. Within the larger caps, or maybe in sectoral plays, we're seeing the revival of IT come back big time. So some of our mid cap stocks have done really well in terms of earnings. Again, after that, I think it's a stock specific story. So you look at the paper industry, the results have been fantastic. Largely coming out from a pretty lousy time for the last 2-3 years. We have some interest in the paper plays, and then in the auto ancillaries place, we see that the results have been encouraging. I expect that to continue going forward. So I haven't taken a massive new call saying this result was so good that I just want to buy all of this stock right now. But a lot of encouraging results in these sectors. I'm sorry I can't give a lot more information because we're still buying.
Completely understand. Okay, were you visibly impressed with the numbers of HDFC AMC to either go out and buy that stock, or just look at the valuations motoring sky high and still feel happy about it? My only question is, Deepak, that if somebody let's say got invested in this stock and is right now looking at the valuations of an HDFC AMC versus Reliance Nippon Asset Management, there is a towering difference. Is there merit in making a fresh investment case for an RNAM because of the valuations compared to HDFC, despite the brand recall that it has?
So I think there are a bunch of stocks that are semi-listed. There's Aditya Birla Capital as well, and that's been beaten down a bit. There is Reliance, as you rightfully said. There is a few of the others which are intermixed in some of the other companies, so we don't really get them independently. But at 13% of assets, HDFC AMC has to really double, according to me, double turnover in order to justify this at a 30 times earnings. Put simply, they're going to have to earn 1,800 crore pre-tax profit in order to justify something like this, 1,500 crore pre-tax profit in order to generate these kind of to justify a 40,000 crore multiple, 40,000 crore market cap, and to get to 1,500 crores of pre-tax profit, they'll probably have to go about 3,500 crores of turnover, because their commission structures involve paying out quite a bit of commission to the intermediaries as well. I don't believe that's going to happen with the current mix of debt and equity market cap and of the AUM that they have, and the growth which will come will probably be incremental. What we have been noticing is that they've increased the total expense ratios on a number of their funds. So, incrementally, we believe that there is going to be an increment in revenue, at least for the next quarter or two. Markets have been very kind. So, obviously, I think nobody's going to stop doing their SIPs or putting in money into assets right now. So, it looks rosy for now. The valuation may be a little high, but then I'm biased because effectively I am also an asset manager, a very small one, but I look upon this and say, well, hopefully one day they will give all asset managers these kind of valuations. But to be fair, 6% of assets is where mostly asset managers come. That's where it comes home to roost. And if you have a 50% debt portfolio where you can't charge more than 0.5, 0.7%, chances that you'll get even more than 6% in the long term are low. So, I think it's a little high. However, this is the HDFC house, so you can't say anything against it. Markets are going where they're going, so I'm not buying. That's the only thing I can say.
Well, if you do list Capital Mind ever, let us know. We'd love to interview you on that platform as well. But Navneet, interesting. One person who's saying that he's not going out and buying HDFC AMC right now, at least.
Yep, I don't know if the reason for that solely has to be the valuation. And Neeraj, you spoke about the gap which it has with Reliance Nippon. Clearly, I believe if somebody is betting on the AMC theme now, the risk reward maybe on Reliance Nippon could be on the higher side as compared to HDFC AMC, but not to doubt the pedigree of the management or of the HDFC brand, and clearly it's rewarded its shareholders, whoever got allotment in the IPO. But just want to highlight a few more stocks before I take the next question with Deepak. Pull up JSW Steel, that's sitting at days high. Some bit of gains have come in there just in the last half an hour of trade. 4% higher for JSW Steel. It's also touched its fresh 52-week high, and something like Shree Cement, that too has poked up in trade, so watch out for that one as well. From the broader markets, I think since the morning session I've been observing Amritanjan Healthcare, that's seen good gains, and currently it's inching very closer to that upper circuit limit of 20%. So 352 was the high of the day, which is also the 52-week high. Watch out for this one. Good going. And Pfizer, that's seen a good amount of gain, and also on very high volumes. If you could just get the AVAT function of Bloomberg terminal for Pfizer, that's going to tell you on a big amount of volumes today the stock has gone up to 13 to 14% higher. In fact, volumes have been way higher if you compare it to last few trading sessions that we've seen for this one. There you go. That's the AVAT function, which is the white line is projecting today's volume, and the blue line is the average volumes of the last 20 days. So just before I take the next question with Deepak, quickly if I can get a technical view on this one, Manav. On the charts, Pfizer, with today's move, what will you suggest? Is it a fresh breakout? If somebody's already taken a long call here, should they stay invested?
Absolutely. I think the kind of a breakout that we've seen into the stock clearly indicates that the bullish undertone is quite positive, and this breakout has accompanied by good momentum backed by volumes, and this has been an outperformer in a very recent few trading sessions. And not only that, there could be another further upside of at least 10 to 15%. So definitely, ideally, who's holding it should continue to hold so, but one can also initiate fresh longs.
Okay, stay invested with the long positions that you have on Pfizer is the technical advice. 13 to 14% higher, and obviously last 7 days gains, what you're seeing on your screen, majority of them have come in today's session. Let's move on and talk about the chart of the day. The Indian viewership profile is changing, and that could be one of the reasons why the Nifty Media Index has given its worst return in a very, very long time. Yash Upadhyay is here to tell us why on chart of the day. Yash, over to you.
Thanks for that, Navneet. So the Nifty Media Index, that has slumped more than 17.5% so far this year in 2018, which means that it is their worst calendar year return over the last 6 years, as the industry faces a growing threat of digital as well as legal hurdles. From its peak of January 2018, the index has collapsed as much as 22% to hit a fresh 52-week low just back in July. And now the main reason for this being the increase in digital, the main reason for this being the sharp moves that we've seen in index heavyweights like Zee Entertainment and Sun TV. Now the reason for this being the increase in digital content consumption, which has had a bearing on these traditional TV broadcasters. Now while brokerage firm MK believes that TV would continue to remain relevant, the increase in consumption over the digital platforms, that would compel these traditional TV broadcasters to commit investments for the developing and marketing of content, which would in fact have a negative impact on their cash flows and compress margins as well. Well, even the cable TV operators, they were not spared, as the likes of Den Networks and Hathway Cable, they too are down by more than 50% on a year-to-date basis, following the announcement by Reliance Jio of its entry in the fiber-to-home broadband network with its Jio Giga Fiber services. And lastly, the multiplex chain operators PVR and the Inox, they have had problems of their own after the Bombay High Court ruling allowing people to carry their own food into cinema halls, which would impact their high margin food and beverages segment, which contributes nearly a quarter of their revenues.
Well, wow, that's interesting. Worst year for media stocks since 2012. Yash, thanks for putting that into perspective. That's some statistic. Deepak Shenoy, before we talk about some specific names, and I think you have some very interesting ideas too, or at least themes to talk about. Media, and I can, you rank it from the largest company, arguably Zee, to the smaller ones, to the fringe players. Except for maybe ENIL, not too many companies have really done so well this time around.
Well, it's okay because there's nothing special this quarter. I think elections are going to be the big thing for at least the TV and the news media segment. There's also, there's the media has become, there's a transmission play, there's a content play, there is a, there is a distribution play. So there's a bunch of other, a bunch of different segments here that are quite interesting. For us, I think English media is relatively small, so but it tends to get a lot more attention. But regional or Hindi belt media plays should actually do quite well in the next year, and I believe valuations from that perspective will come from how many of these segments each of the players is able to play. So you've got a Balaji Telefilms at one end, which went from a contract manufacturer of a serial to having its own content through an alt Balaji kind of network. Have to see how successful that is in the long run. And you've got even players which are not which are like a Saregama, which has moved from being a licensor of music to a person that creates a little USB based preloaded transistor device looking kind of equipment, which is very nice. I've actually bought one. So I think people are now straddling multiple areas. It's going to be very interesting, but I like this play. I think content producers are the place to be. I don't like much of the others. People who actually own the copyright to content, I think they will do really well in the future.
Okay. Deepak, now, Tata Chemicals. What's the story? What's happening here, which is different from what's happened in the previous years?
So as a disclosure first, Neeraj, I'm biased because we have recommended, we have bought it, but The point over here was a company that makes soda ash and sodium bicarbonate and stuff like that. So that's primarily the chemicals business. It used to have a fertilizer business that it got rid of, largely low margin kind of manufacturing business. It also owns the Tata Salt brand. And now it's created a bunch of brands around pulses and spices called Tata Sampann and stuff like that. So they've been kind of pushed this space up. When they've sold this the fertilizer brands, they got a bunch of money. They also got a bunch of money because they held shares of Tata Global as a promoter. And Tata Sons said, listen, we don't want this cross-holding, so why don't we buy you out? They gave them about 800 crores for that stake. That's brought their net debt down to 1,500 crores. They are targeting a 5,000 crore turnover in the consumer business. And the consumer business is quite interesting. Salt itself, Tata Salt is a very, very big brand. Nobody would have thought Tata Chemicals owns it, but it does. And I think that's where some of the glory can come from their salt and consumer distribution and sales growth going forward. Relatively low debt. Their PE looks really low right now. It's only 6, but because of the one-timers that came in the last 2 quarters, if you remove that, it's about 17, 18. But today, when you have a Britannia quoting at a 70 times earnings, consumer brands, are quoting at a much higher price to earnings ratio. You get a consumer player at a relatively smaller price. Of course, they have to still grow and kind of really make a big entry into this space and scale it. But I think that's where the growth is going to come, and we're betting on it. So going forward, that's I expect good things from them.
Okay, that's the first bet on Tata Chemicals coming from Deepak. Deepak, the other one is from the two-wheeler pack, and that's Hero MotoCorp. What's the rationale behind it? If it's valuation, then why not Bajaj Auto? Because the valuations of both, if I look at on 1 year forward basis, it's just the same, about 15 to 15.5 times.
Yes. Again, as a disclosure, owned Hero MotoCorp. I've owned it since the IPO, so in 1985 or something. So, but the point here is really, we took a bet on a two-wheeler company that's actually focusing on the electric vehicle space directly or indirectly. The TVS has something, we don't know yet if it's going to come out with something, but Hero is invested in this company called Ather. They put in about 200 crores already into it. They have a significant stake in that company. And Ather is manufacturing a bike. It's local to Bangalore. I'm very impressed with what I've seen so far. But they're manufacturing a 1,20,000 rupee plus fully electric bike with charging stations all around Bangalore now. I think this is a really big scope for growth. And it's not because electric is a fashion. It's just that electric is actually much, much cheaper than running internal combustion engine based bike. So if Hero MotoCorp is taking the first step, I believe this will be a huge thing. It's already very, very big in China. We've seen China use, in Beijing and Shanghai, I think they don't even allow petrol or diesel based bikes to be registered anymore. So it's going to be a big thing in India as well in the future. And I believe somebody who takes the first steps right now will benefit. So Hero, from a valuation standpoint, again, less than 20x earnings, 5,000 crores in cash. Relatively solid market share position in the two-wheeler space already. Great distribution, great brand recognition. So I think, overall, long-term thinking, 5 years from now, this is where you have to be.
Okay. Deepak, as always, lovely having you. Thank you so much for taking the time out and being with us today on Bloomberg Quint.
Thank you so much.
Pleasure having Deepak Shenoy as always. By the way, just before we hear out the next management, Sarvendra Srivastav, Hero MotoCorp has corrected a couple of percentage points today. Would you go out and take a trade on the two-wheeler space, particularly Hero?
I think the trade on the two-wheeler space to me looks to be on the sell side. So I'm probably a seller on both Bajaj Auto and Hero Moto. In fact, even TVS. My sense is that these guys would lose another 15 to 20% going forward. So that's a 1 year call. In the next 9 to 12 months, my sense is that these guys will gradually lose around 15 to 20% more in their prices. So I would not be surprised if by end of the year, 12 months down the line from here, I think Hero Moto should be somewhere close to 2750 odd levels. I think these are long-term distribution patterns. Hero MotoCorp has actually broken a 2-decade trend support. So these are serious breaks. These are serious breaks, Neeraj, and I would not venture into the first or second month of the break and say that the break is already over and the damage has been done. I think 20-year trend breaks will damage you by at least 2 to 3 years, set you back by 2 to 3 years. And that is what two-wheelers has done. And to me, it's one of the most riskiest setups, similar to what pharma was doing in 2015 when we used to point out. Nobody wanted to listen then. Same goes the story for two-wheelers. So the more the people don't believe me, the more I'm convinced that this is going to be the worst performing sector over the next 2 years. So all trade on the sell side. So I'm afraid I don't have a clear trade right now, but two-wheelers for the next 12 to 24 months is a sell from my side.
Okay, speaking of autos, before we slip into a short break, hear out Pawan Goenka of Mahindra & Mahindra on how he plans to increase market share for the tractor business and what are his plans for the two-wheeler space.
See, no company in any business will ever say that I plan on a stagnant market share. Everybody will look to grow market share. We will also look to grow market share in our tractor business, in all our businesses. Now, what's important is to try and explain why we think we will grow our market share, because if we have to grow market share, somebody else has to reduce market share. Yes. Market share has to add up to 100. So we have several things going for us. First of all, I would say that we have about as brand new a portfolio as one can have. Our mainstream tractors in the Mahindra brand, which is the Novo, the Yuvo and the Geo, have been launched in the last 2.5-3 years. No tractor company will have 3 brand new platforms in the portfolio, and this covers almost 80-85% of our sort of horsepower segment that we are in. And that's a very, very strong point for us. And these, each of these 3 tractor platforms have done extremely well in terms of creating a technology image and the performance that we're giving with this tractor. So we see these growing. Second thing that is going for us is a new brand that we have launched, a very small beginning with the Trackstar brand, which is right now not even 1% market share. But this is in some sense flanking from both sides and will give us an opportunity to grow. Now that brand in the 3 months has doubled in volume. Now doubling from 2 to 4 doesn't mean that it's a success, but all the same it's sort of catching on, and therefore to get a couple of percent, 3% market share from that brand as we move forward without cannibalizing our Mahindra and Swaraj brand would give us the extra market share. The third thing is Swaraj brand is a brand that has a tremendous brand loyalty, even more than Mahindra brand in some manner, because once a Swaraj buyer is ever a Swaraj buyer. Okay, and that somehow that Mera Swaraj is sort of the brand tagline that we have today, Mera Swaraj, and that Mera Swaraj has worked so well, which in a way represents what the Swaraj customer thinks of Swaraj. It's Mera Swaraj, okay, and therefore that brand being so strong, and that's the probably if you go back 8 to 10 years and look at how much market share any brand has picked up, I think Swaraj brand has picked up more market share than any brand in India. Okay, so we have these 3 things going for us: a new sort of new product line, the Swaraj strong brand loyalty, and a new brand in Trackstar, which makes me believe that we would increase the market share from the current level of 43-44% to something more. I mean, one cannot become 60-70%, sure, but something more than 43-44. Having said that, I would also say that tractor industry in India has no weak players. There are no sitting ducks. Okay, and every player has strength. Some players have regional strength, some players have strength in a certain segment, and therefore for any company to come in, whether it's Mahindra or anybody else, and say, I'm sure that I'm going to grow market share, is overconfidence. You have to really fight hard, even for 0.5% increase in market share. All I'm telling you is that we believe we have the ammunition. Whether the ammunition will fire or not fire depends on what other ammunition is there in the market.
Two-wheelers, it's not particularly the best or the best product suit for you. What are you doing there? What do you happen to hope to for that to happen?
So see, two-wheeler has 3 parts to it for Mahindra. One is the commuter segment, which was MTWL, where you know very well that we have scaled back completely, and now we are in a mode of just continuing with the products that we have, and in a very small number, and basically the losses that we used to have in that business has been cut down to something very, very small compared to what we used to have. And that business will continue in a very small volume segment and continue with what we have. The two major developments for us. One is the what we call CLPL, where the Java bike will be coming in, and during this financial year, before the end of this financial year, we will launch the first bike, where we are very hopeful that that bike will hit the fancy of people and bring back the old memories of Java. I don't have personally those memories, but those who do will like these bikes that will be launching, and we do believe that with that we will be able to get a good business out of the two-wheeler segment. And the other one is the PMTC, the Peugeot motorcycle, where primarily it's a scooter business, but we are totally rehashing that strategy and looking at new set of products, new markets with that. Peugeot is a very strong brand for scooters right now, which we need to do a little bit more work to leverage fully. So these two pieces, the PMTC piece and the CLPL piece, are the real stories for the two-wheeler, not what we used to do with the commuter bikes.
Welcome back. You're still watching Countdown with us on Bloomberg Quint. Just 24 or 25 minutes to go for markets to shut shop, and Nifty is still hovering around those levels of 11,555. Banknifty is down over 150 points in trade right now. Let's pull up the European market indices and check what they're doing this Friday. Well, it's a positive start, and they've sustained actually. No major gains seen besides CAC, I guess, which is just up about 0.2%. Otherwise, it's flat to positive move coming in for the German index DAX and also FTSE 100, which is up about 5 points in trade. All right, let's talk about the stocks back home, which are making some bit of news, and tell you which are the Fab 4 stocks for the day. And we've got Nikki Mirchandani today to take us through that list. Hi, Nikki. Good afternoon.
Hi Navneet, actually two infra stocks on our list today. The first one is Ray Infra, which has risen as much as 10% to its the most level that we've seen since July 2017 after the subsidiary is planning to divest around that 26% stake in drilling unit to overseas unit. Next on the list we have Ramkey Infra, based on the ET reports that the company may sell off its road assets worth around 3,450 odd crore. Third in the list we have Pfizer, where the company is at record high level on high volumes, almost 8.5 times its 30-day average volumes on NSE. And last on the list we have ONGC, where UBS has maintained the buy rating with a target price of around 245 and suggests that the deleveraging through potential listing of OVL and other non-core assets could be beneficial for the company.
Thanks a lot for that, Nikki. I actually want to take up Pfizer. I think either Manav or Sarvendra, one of them recommended holding on to Pfizer. I think it was Manav, if I'm not wrong. Manav, well, interesting call and one that's worked out very well. The question is, how much more upside do you see here with this 17.5% uptick that we've seen already in Pfizer?
Neeraj, like I just mentioned, it's a purely on the momentum, and the volumes definitely suggest it's in a new league. So at this moment, it is very difficult to anticipate where up on the upside it can go. On briefly looking at the scenario, I think 10-15% is what I had suggested. But in such a scenario, the best strategy is usually to maintain a trail stop loss and usually go on with the trend. But looking at this and the kind of a sharp move we've seen on the intraday spike, usually after such a spike, you don't tend to see a very good follow-on move. I think after such a 18% move on the intraday basis, I think if someone gets 3,500, 3,550 levels by next week or so, it's some good time at least to park or take some profits off the table.
Okay, going up on good volumes, that's Pfizer up 18%. The other stock which we highlighted at the start of the show was BHEL. It was up 4 to 4.5% that time, and right now the stock's almost at day's high, just about day's high, 8% higher. Pull up the futures as well. Remember, BHEL too has gone up on account of good volumes on the cash side today, and on the futures too we've seen fresh long positions as the open interest has surged about 20%. Sarvendra, on the charts, with the kind of move that we've seen of 8% around the level of 80, would you advise taking any fresh bet here?
See, the stock is definitely showing some signs of life now and some signs of bottoming out. So a small little reversal pattern is already in place, and what we got today was actually a breakout of that very old pattern, and it's around a 3-month-old pattern forming. So the neckline got broken today itself. So today is day one. So anybody wanting to take chance, even though it is slightly overbought, you should not mind taking that chance and looking at a trade here. The targets I would believe that are close to 90-92 for this pattern. So either you buy here itself or you may wait for a 2 or 3 point dip. But with a stop loss below 74, in any case, BHEL looks like a good decent buy. My target would be 90-92 on this one. The only thing that might stop it for a day or two is the long-term averages, which are right now placed around 82. So there there's a possibility that at around 82 you find some little profit taking. But once 82 is taken out, I think this should be a quick move towards 90-92.
Well, in addition to BHEL, I think the sugar space, Bajaj Hindustan, Balrampur Chini, maybe a couple of other names, Renuka Sugars, etc., too, are trading marginally in the green. Some support may be coming in from the government side, but on the export front or otherwise. But these stocks are very difficult to go out and invest in. Please be careful before deciding to do that. What is also doing very well today is AB Fashion. It's now at 200 and nudging those near those all-time high levels. Doing very well for itself is Aditya Birla Fashion, just spiked up in the last few minutes of trade. Siddharth Sedani of Anand Rathi is with us today on the show. Siddharth, good having you. Thanks so much for joining in. Well, since I was on the topic of Aditya Birla Fashion, let me start off with your thoughts on the retail essentially the retail kind of companies, the Arvinds, the AB Fashions, the Trends of the world. What do you do here?
Thank you, Neeraj, for having me on the show.
Pleasure.
Well, Aditya Birla Fashion, we are very positive, and we had covered this company from the levels of 130, 140s. We have already achieved a target of 197. In fact, the quarterly results, which was a turnaround quarter from loss to profit to the tune of 20 odd crores. So, of course, due to many strategies which AB Fashion has followed in terms of downsizing their store sizes, same store growth is developing, improving in pantaloons. Along with that, the other brands like Louis Philippe, Allen Solly, all these brands are really gaining up traction. So for that, I think there is a good turnaround story in hand. From the same space which I would like to speak about is Raymond. Like a 5,000 odd crore market cap company. And we've seen quite a good drift fall in last 2 months in Raymond, which is at around 800 rupees. The kind of brand franchise this company holds vis-a-vis to the market cap which it contains right now of around 5,000 odd crores with a strong land bank in Thane. I think this calls for a re-rating. We like Raymond. We have a target of 50% upside from here to the tune of 1,200 rupees, and we believe that whatever has gone by in the company, I think now the management is confident on value unlocking. Along with that, a strong potential for the shareholders. I think Raymond looks very interesting in the same space with a target of 1,200.
Okay, well, so that's the view. AB Fashion looking good, but Raymond is something that Siddharth Sidani likes a lot more. Okay, do watch out for that. Siddharth, by the way, just a quick thought on Hexaware and whether this fall gives any investor an opportunity to buy into Hexaware, or would you believe that there are better mid-cap IT names available?
I think Neeraj, there are better IT names which are available, likes of Persistent System, which we are very positive on. We believe in the digital space, it can really do good. Along with that, the kind of cash which they hold in their balance sheet of around $175 million. This is also a strong play for inorganic growth in US. Followed by Persistent, I would like to go with L&T Technologies. I think this company is also enabling in terms of 5G space, IoT, artificial intelligence. I think there are a lot of scope of business for this company. L&T Technology also looks very interesting to us with a target of 1940.
Okay, stay on that, Manav as well as Sarvendra. We'll take in some closing thoughts as well, but a couple of in-house pieces. Firstly, try and figure out what are the stocks that could enter the ban or come out of the F&O ban. And Navneet, is it a long list?
Not really, Neeraj, but I just want to give a caveat. We are entering into the expiry week, so definitely you will see some bit of unwinding which takes place or rolling over the positions to the next series. But still, as of now, stocks like Jet Airways as well as Dewan Housing looks like they've crossed the 95% mark in terms of the total open interest in the futures and options market as a percentage of market-wide position limit. And remember, until yesterday also these two stocks were pretty close to entering the F&O ban, so watch out for them. But Neeraj, just want to highlight the sort of open interest build-up that one has seen for something like Hexaware today. We've never seen on August one of the futures you'll see just 200% higher open interest. I'm not saying it's entering into the F&O ban or anything, but do watch out because there is huge momentum with regard to OI build-up on Hexaware. Obviously, the positions will be rolled over to the September series. Hence, we could see a major bump up coming about in terms of OI build-up.
Interesting. Thanks a lot for that. Just wondering, Manav, would you trade Hexaware?
See the kind of the fall the stock has witnessed. I think in such a scenario when there is a sharp gap down which happens and that gap down usually breaks the weekly support levels, I think the time comes that you let that stock build its new short-term support and the resistance level. So usually in such a scenario it's better to pass such kind of a scenario. But at the current levels, what I can suggest, 400 is a long-term support zone which coincides with its 200 EMA. So in case if we get this stock at the lower levels close to the levels of 400 and there are some reversal formation happens, I think that could be an interesting level to initiate some long positions only for a short-term bounce. But looking at the overall scenario, it has definitely hampered its medium-term trend. So we will have to review this stock probably after a week or so for some further updates.
Okay, time now to get a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start off with you.
Yeah, so one of the stocks that's moving significantly in today's trade is BHEL. It's up almost 9%. There was this report that came in from Deutsche Bank today, and they did an entire annual report analysis on it. And one of the things that they said in the report is the fact that instead of going in for any kind of OFS, BHEL should do a buyback to actually utilize the cash on the books. And post L&T's buyback, that seems to be the trend, and BHEL has reacted positively to that report. And I asked dealers whether they know something else, why this rally is there, and that was the only thing that was cited. Metals as a package doing well over the past few days. We've seen sizable amount of moves that's coming in on NALCO. There's no blockbuster move, but every day you're seeing a little bit of move that's coming in. Some of the HNIs are actively accumulating NALCO at this point of time. They believe that the metal rally, at least in the short term, should clearly happen. And the last stock that dealers are talking about, Punjab National Bank, over the past few days has been doing well. Some of the dealers do indicate that majority of the selling is over in the counter. They believe that accumulation should happen. They're not very confident of a big move, but they believe that the downside is limited on PNB at this point of time. But Yatin, what are you hearing?
Darshan, Cadila is one stock, and the stock has seen a sudden spike in the last 10 minutes of trade. Of course, there was some news on the exchanges citing some US FDA clearance coming in for one of their plants. Of course, dealers do recommend a BTST based on FNO trend, so this is one stock which is on the dealer radar. Apart from that, Titan has seen some unusual softness in trade today on good volumes, almost 30 lakh shares traded in the cash segment, and dealers do indicate that the domestic funds are said to be sellers here. In fact, they are currently participating in the ICICI Securities Investor Conference. I think post that we have seen some negative reaction. Probably the management commentary is something that we'll be watching out for. And finally, we have Welspun India. There is a buzz of a block deal as far as this stock is concerned. Almost 66.5 rupee, has seen some good momentum in the last 15 days of trade. But big block deal is what dealers are talking about at this point in time.
Welspun, let's watch out for this as well. And if indeed that rumored deal comes about, and then there could be some further action as well out there. Siddharth, let me come to you. If one is looking for an investment idea right now, what would you advise?
Well, Neeraj, at the current state, we would like to go with consumption, and one of the consumption play is Voltas. The kind of numbers, of course, numbers were quite decent enough, 10 to 12% revenue growth. On the margin front also, we expect this company to perform well. In the AC segment, they are the market leaders of around 24% market share which they hold. And the kind of new joint venture which they have come out with Beko, and they are planning to come up with other consumer white good products like soft refrigerators, washing machines, microwaves and many others. I think this will create also a good potential for revenue going forward. Along with that, the project business has also been doing good, a little less than 5,000 crore of order book in place, and I think this is growing on a quarter-on-quarter basis. Voltas in the consumption space, a Tata Group company, looks very interesting to us. We are eyeing to a target of 680, and we believe it is quite achievable in next 3 to 6 months.
Okay, that's the top call coming in from Siddharth Sidani on Voltas. Besides that, Yatin was mentioning about Cadila. There's a release on the exchange's website stating that its biologics manufacturing facility has successfully completed US FDA inspection, and that's the reason why you're seeing the stock is now sitting at days high. The facility is located in Ahmedabad, 2% higher for this one, but it's just 10 minutes to go for markets to close, so let's quickly get you some closing strategies from our technical experts. Sarvendra, if I could come to you first for Monday's trade, any BTST or STBT?
See, I will go with the flavor of the market, which is slightly negative for the day. So for Monday, I would say I would go with an STBT, and I will short sell Britannia, currently around 67.70 on the spot. I will short Britannia for a target of 67.10, 67.20 for Monday, and would keep a stop loss there at 6791.60.
Manav, what about you? Your strategy?
I will have two buy calls. My first would be a buy on RBL Bank. The stock has been in a very good momentum and recently has breached its good monthly support levels, and today a breakout with above average volumes, and the volumes are above 50 DMA, which is definitely confirming that this trend is likely to continue on the upside. A stop of 605 on the lower side for an upside target of 623. My second buy call will be on Glenmark Pharma. The pharma space overall has seen that good momentum shift and a trend reversal, and Glenmark has witnessed a good series of 6 days of continuous advance. This is a pure momentum play, and with a breakout on the weekly charts, I think this trend is likely to continue. We recommend a buy into this with a stop of 650 for BTST for an upside target of 680.
Okay, buy call on Glenmark Pharma. Pull up Ajmera Realty. It's gone up on really high volumes, and currently the stock's sitting at days high level, 11% higher, and almost 5.5 lakh shares so far have been traded, as opposed to just 21,000 shares which were traded yesterday on National Stock Exchange. So good going for this one on back of good volumes as well. Manav, very quickly, anything you make of the move? 11% higher on back of good volumes?
In fact, this stock definitely looks very interesting. The kind of a decline that the stock has witnessed from its peak of 365.70, and recently, since last 2 months, the stock has been witnessing a good base formation, having strong support at 200 on the lower side, and has observed the breakout of the consolidation zone in just one trading session. It talks a lot. So I think we'll have to see how this stock actually reacts going forward. As long as the stock sustains above 220 levels, I think the overall trend reversal signals definitely indicates on the upside, and will not be surprised to see if the stock actually goes and tests the levels of 265 in the near term. So even at the current levels, it's a very good risk reward ratio. One can maintain a stop loss of 205 at the current levels and expect a good upside of at least 20-25%.
Okay, so that's a positive call coming in technically on Ajmera Realty, sitting with gains of nearly 12%. Siddharth, before we let you go, just wanted your thoughts on L&T. How are you approaching this one now after the buyback news? Were you surprised with the quantum of buyback that the company announced? Clearly, a couple of brokerages are now saying this buyback will boost ROE going forward, but it could be EPS dilutive by almost 2 to 3%.
Well, I totally agree to this point, and not that surprised, but of course it was anticipated around these levels because of a reason that in the cash, if you talk about the balance sheet of L&T, there was a 16,000 crore which is lying, and 9,000 crore at 1,500 rupees. I think it's quite decent, but if you look at the numbers and work out the numbers in terms of the acceptance ratio is concerned, it's quite low. It is around 1,100 rupees. So what we believe is, of course, if somebody wants to, a retail investor wants to go and participate in the buyback, 147 odd shares need to be bought under the retail segment. But apart from that, we are very positive on L&T. I think it's a dark horse for next 1.5 year. Because infra space is going to play out entirely for next 1 year, and L&T would be leading the pack. We are very positive on L&T with a target of 1894, specifically on two reasons. Of course, the kind of management commentary they have been giving of 10 to 12% order book growth, along with 12 to 15% revenue growth in next 2 years. We are very positive on this company with a target of 1894.
Okay, positive 1894, and definitely acceptance ratio will be on the lower side. As we know, L&T doesn't have any sort of promoters. It's owned by fund houses, and also on the retail side, the bifurcation would be different on account of how many shares every shareholder holds, to the tune of almost 2 lakh shares. But that's about L&T. So that we leave it at that note. Thanks a lot for joining us and taking us through your views on individual stocks today. But the other stock which is doing well is Vedanta, I guess. That's the top gainer right now on Nifty. Darshan highlighted the entire metals pack is up and about. So 4% higher for Vedanta. Sarvendra, any bet would you take either on Vedanta or any of the metal counters?
I think clearly looking at the momentum setups here itself, I think Vedanta also is taking support in this range between 200 210. It has taken good support over the last week, 10 days. looking at today's setup, I think a trading bounce definitely doable here. You should be looking in for a small little long trade for a target of around 235, 240 on the spot prices. And if you are doing that trade, which is a recommendation if someone wants to do, you should be keeping a stop loss at 217.40 on an hourly closing basis, and you should be taking a long trade.
Manav, just one final thought on Kotak Bank. After days and days of a fall, today it's marginally in the green. Is there a trade here?
See, the stock has actually seen a good series of corrective decline. It is also forming a small double bottom pattern on the intraday charts, but going forward, I think we still need some confirmation for it to suggest for a trend reversal or any a short-term bottom formation. So at the moment, there is a very strong resistance at 1270 on the upside. Once if the stock breaches 1270 on the upside on closing basis, I think that is when you will see a trend reversal, and possibly then the stock would be moving ahead and test the levels of 1350. But at the moment, what we see is like 1230 is an important support, and in case if there is a base formation and a break above 1270 is when one should only initiate long positions.
Okay, that's Kotak Mahindra Bank. I think Piramal Enterprises also has gone up in trade just in the last 5 to 10 minutes. That too is sitting around the day's high mark, 3% higher for this one, with gains of nearly 81 to 82 rupees. All right, just about 3 minutes to go for markets to close. So let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, clearly it looked like a day of profit booking, because we've seen the index touching the 11,600 mark yesterday. From there, it's just been about profit booking.
Yeah, and more so on the Nifty Bank. Interestingly, we saw some short build up as well out here. Principal culprit, but lackluster performance by the others too, because it was not just banks. Pharma, for example, had a tough 10. We'll talk about that. Mid caps and the small caps too, taking some stick because the market breadth has looked slightly terrible today. Mid caps and the indices too down about 0.5% or thereabouts. But let's talk about some individual stocks and try and show you firstly on the index what's moved and what's not. So Vedanta about 4.5% higher. Navneet was speaking about how it's the top gainer on the index. ONGC, Grasim, Axis Bank amongst names, and then small moves by the likes of Bajaj Finance or in HDFC, etc. Nothing to write home about really. On the losing side though, private banks and Yes Bank, ICICI Bank, there is an IndusInd Bank down there which didn't do well. Titan corrected a bit. There was weakness in Hero MotoCorp and Pharma by and large. So Sun Pharma is one out here. Dr. Reddy's is here, but Cipla too had some losses in the session today. So it was essentially private banks and exporters, because I see Infosys too amongst the list of losers which have pulled the index down in the session today. What about the mid caps though, Navneet? The market breadth not the most impressive.
That's right, Neeraj. It was a mixed session when it came to the broader markets as well. If you had gainers, you definitely had losers as well. So let me start off with something like Pfizer. That stock was in a tear today on account of good volumes as well. So clearly good buying scene for this one to monitor the sort of delivery data that comes out for today's trading action. So finally closing with gains of 15%. Amritanjan is the other one. The stock was up and about, I think, throughout the session today, closing with gains of 16%. It is also closing. It also touched, by the way, its 52-week high in today's trade. And BHEL, that had a great move. On the cash side, volumes were higher. On the future side, traders were betting on the long side, and also the stocks closing around the day's high mark, which is always a positive sign. JSW Steel, in fact, the entire metal space was up and about, but this one too touched fresh 52-week high and also closing at day's high with gains of 4.5%. Apollo Hospital, we've been highlighting this counter for you now. For the month of August, it's up nearly 25%, and the gains actually continue. On the cash side, it was up 4%, and once again on the future side, there was heavy build-up seen on the long side. Infibeam was also up and about. This one too touched its 52-week high in today's trade, 4% higher. And Ajmera Realty, this one went up in last hour of trade on account of very high volumes, 12.5% high, closing around the levels of 228 for Ajmera Realty. On the losing side, well, Hexaware has been the stock that we've been talking about because of the equity that changed hands in the morning. The promoters sold some stake, 14% lower, and huge amount of OI build-up on the short side. Sun TV was the other one which came under pressure in today's trade. Some bit of shots were also seen, so closing around the day's low mark. Pratap Snacks was up and about after they announced a deal in yesterday's today's trade that they're acquiring Gujarat-based company called Awadh, but some bit of profit booking after yesterday's gains of 18 to 19%. The stock was down 6%, and also something like your high beta counters, JP Associates was down, and from the F&O space you had stocks like Canfin Homes that also saw some bit of selling pressure in today's trade. In fact, Canfin Homes is down nearly 3 to 3.5%, closing around the day's low mark. On the future side also, some bit of momentum was seen on the short side, Neeraj.
Well, so all in all, not the best of days, nothing terrible, but just a day staying low, grinding low, and a day of profit booking for sure. Bring up firstly today's trade, so the contributors of today's session and maybe the turnover, and then we look at what's happened for the week as well. It's a truncated week, mind you, 4 days, but this is what the contributors list has looked like. And banks, private banks right here, not doing all that well, not even a chance to export us to feature out here because the private banks just were so dominant in trade today. But interestingly, Reliance continues to...
Yeah, I was just about to say, I think every second day or almost every day we see Reliance featuring on the contributing side of the list.
So that's one. The turnover should come up on your screen. The cash market turnover looked impressive, Navneet, at 1 p.m.
Yeah. Yes, it's been on the higher side. In fact, the last highest turnover, I guess, for this month was somewhere about in this range of 33.5 to almost 34,000. And also, though F&O turnover may have cooled off from yesterday's because of Banknifty weekly options expiry day, but Neeraj, it does appear still on the higher side, at least above the average turnover that we see on daily basis. So definitely, the participation has been really good in today's trade.
Yeah. Now, let's get the weekly performance as well, and let's just try and see what's happened. This is not exactly the weekly performance, it also includes last Friday, but gives you a sense of what's moved around. So L&T, UPL, Tech Mahindra amongst names which have done well, Navneet. Reliance, as you were mentioning, right up there. OMCs bearing the brunt of selling.
Yes, BPCL, I think down almost 5%, and Infi, I think this is the one which has dragged the index lower in today's session as well. Titan came under pressure, and we were talking about banks, Neeraj. I think where last week there was contribution coming in from something like Yes Bank, ICICI Bank, and for the week they did see some bit of profit booking, and also IndusInd Bank was down for the week.
Yeah, Standard, just keep in mind though, this is a 5-day performance. This is from the 16th of August and not from the 19th of August, but gives you a sense of what the last 5 days movement has been like. Final thoughts from our experts. And Manav, how much more downside or how much more pressure do you expect the Nifty Bank to have? Because every single day experts have come in and said that they might look at some bit of bottom formation out here only to see the index slide further from 27,800 odd where we are right now. What are the levels that are evident on the screen?
See, the most important support for the Bank Nifty would be at 27,700, and this also coincides with its previous 3-week support zone. So, and also it's a rising window pattern. So I think until unless we don't break this on the lower side, we don't see any sharp sell-off coming in. But on a very near-term basis, the formation definitely indicates a little bit of exhaustion pattern, since there is a divergence between Nifty and Bank Nifty. For instance, that the Bank Nifty has not confirmed a new high, which has been confirmed by Nifty. So usually such formations, and since Bank Nifty has a very high weightage on the overall markets, I think if 27,700 is breached, I think you would see some sort of a consolidation and profit booking scenario going ahead. And once those support levels is breached, I think the next support level would come close to the levels of 27,000. So that could give us some sort of a room on the lower side, and that is where once those levels are breached, you can anticipate and expect some profit booking coming for the markets going forward.
Okay, that's the view coming in on Nifty and Bank Nifty for the day. Sarvendra, just last question, how would you approach the trade now? Next week will be important, it could be volatile considering the August series will also be expiring.
No, absolutely. I think last 3 weeks, if we go and check the Nifty as well as the Bank Nifty, I think last 3 weeks Nifty's range has been between 11,400 to 11,600. So that's been 15 days in a 200-point band. That's too narrow. And same goes for the Bank Nifty, which is last 3 weeks has been between 27,800 to around 28,300 odd. So these are very tight ranges. Now you will definitely get a resolution That's for sure. And as you rightly pointed out, the next week is critical in doing that. The only concern or the only grey area here is that the daily momentum has been falling for both the Nifty and the Bank Nifty now for the last 7-8 sessions. So if that's the case and the Bank Nifty looks more weak, as rightly pointed out, my sense is that, you should be testing 26,800. If this breaks slower, 26,800, 27,000 on the Bank Nifty is doable on the downside. In the meantime, you would see Nifty also testing its support area, the bullish gap area at around 11,200 odd. So I think till 26,800, 27,000 on the Bank Nifty and around 11,200 on the Nifty, you can look for a correction. So you should be, if you are trading momentum, you are short for that particular target. Only if these two numbers break, I think larger falls or larger corrections will ensue. Till then, I'm afraid it could be painful, range bound, and it could keep on like this for another week, 10 days.
All right, Sarvendra as well as Manav, appreciate both of you joining us today and taking us through your technical views on the markets. Have a great weekend.
Well, with that, it's a wrap on this leg of Countdown, but stay tuned because we'll bring you the market wrap up next in moments from now from Navneet and me. Thanks so much for watching.